Hello everyone, this is Natalia Itu and I'm a CPA with Colorado Business CPA. Today I would like to discuss the 7 ways to save money on taxes in 2019. We still have about 2 months, so this is a great time to see how you can save perhaps $10,000 or more. So the very first step is if you run your business as a limited liability company, Schedule C, and subject your income to net income, and subject your net income to self-employment tax, SCorporation Election perhaps would be the best option for you, because the net income from SCorporation is not subject to 15.3% self-employment tax. So for example, let's say if your LLC made $100,000, you can easily save about $8,000 in taxes, and still have a W-2 for $40,000. Again, you have to have a reasonable salary when you are SCorporation, shareholder of your SCorporation. However, your distributions or net income from S-Corp is not subject to self-employment tax. So we can help you to file a Form 2553 with a late S election and elect your S-Corporation effective 01/01/19. And the best part about it is because it's November, we have time to run the payroll for you. We have time to do a W-2 payroll. And another thing is if you have not paid your estimated tax payments, we can still, do, we can do a withholding through your W-2, and then you can pay taxes with your W-2, and IRS treats those payments as they were made throughout the year. So you will minimize or completely eliminate your failure to make estimated tax payments. SCorporation. So another option, the second option is, of course, pay attention to the Section 199A optimization. So what it says is if you run a business through the pass-through entities such as LLCs, SCorporations, you will save 20% of the net income. The 20% of the net income from your business will not be taxable. I mean, this is a great tax savings. If you're running your a personal service business, you cannot make more than $157,500 in taxable income or $315,000 for married filing joint. However, you can still save. Let's say you make $100,000 and $20,000 of that will not be subject to tax. I mean, we're talking about $3,000-$4,000 in tax savings. So what we help you is to make sure your W-2 is not way too high if you're running a business as an S-corporation, so you can still take advantage of your 20% deduction, and of course to make sure that your W-2 is not too low, to be overly aggressive, on your W-2. So we can help you to figure out if you're in the right standard, so you won't get in trouble with the IRS. But again, keep in mind the Section 199 optimization. So what we do, we work with our clients and we offer several packages, but this is a simplified monthly plan to maintain your S-corporation. And for $240, that would include, we will file your S-corporation tax return, which is a Form 1120-S, and your individual tax return. We will determine your S-corporation reasonable salary, and obviously all the payroll taxes will be paid and tax returns will be filed. Of course, we will maximize your Section 199A, meaning, we'll make sure you take the maximum advantage of that tax law. We will file a 1099s for your vendors, and also, we'll estimate your tax payments and make sure you pay them throughout the year, so you won't be subject to a failure to make estimated tax payments. And of course, there's also IRS audit protection. And what that means is if we prepare your 2019 tax return and for some reason your tax return gets selected for audit, we will represent you for free. I mean, this is literally can be over a $10,000 value because, you don't want to go represent yourself. And if you hire attorneys or other CPAs or enrolled agents, they can be very, very expensive. So this is a great value for business owners. And the third way to save money on taxes is to pay your children who work in your business. With the new tax law, the new standard deduction for single people is $12,000. If you have a child who is under 18 years of age and he or she is helping you in your business, you have to have a limited liability company or sole proprietorship. So if you're running your business as an S corporation, you need to create a brand new company, which would be an LLC or a sole proprietorship, and then you can pay from the S corporation. You can make a payment to your Schedule C companies, your LLC, and then run a payroll for your children from that company, because that way they will not be subject to any taxes. Again, kids have to be under 18 years of age, and also they have to literally work. So that means you need to create a job duties. You have to have a schedule for them, and of course, you have to have a payments. Literally, everything has to be just like you have a regular employee, because this is a highly audited area. But again, that literally can save you from somewhere from $1,500 to $5,000-$6,000 on taxes. So I highly recommend you to use this strategy if you have children and they help you to work in your business. The next one is the retirement accounts in a business, because when you have a business as a S corporation, as you know, the pool for the Social Security wages, the Social Security wages are lower. That's how the tax savings coming from the S corp. So it's very important to have the retirement accounts in the business, like have a solo 401k. If you have no employees except your spouse, have a solo 401k, which you can still open in 2019. Let's say you have an LLC with $200,000 in net income. We can help you to convert your LLC into an S corp effective January 1st, 2019. We can still run a payroll for you and your spouse, and we can set up a solo 401k plan. Well, we don't set up the solo 401k. You work with a financial advisor. However, we will reflect your solo 401k contributions on your W-2 wages. Okay, if you have employees, you can set up a simple IRA. Or simple IRA, which is, as an employee, you can contribute $13,000 and then maybe like 3% match. But for simple IRA, such as, simple IRA and a 401k, you can't do it in 2019 already. So it has to be done in 2020. But again, you can do a SEP IRA for yourself until you file your 2019 tax return, and the contribution limits is 20% of Schedule C net income or 25% of your W-2 FICA. So again, there are options available for 2019 to contribute to your retirement plans. Some of those plans, contribution has to be made by December 31st, and some of the plans like SEP IRA, you can make a contribution when you file your tax return. And also, plan your 2020, create your retirement accounts for 2020. So a very, very good strategy, very powerful. Not only you saving money on taxes, but you also building a financial wealth. So the next thing is a home office. A lot of people are very hesitant about when they take a home office deduction. Well, do not be afraid. If you use your home office regularly and exclusively for your business, take a deduction. There are two ways you can do it. There's a direct method, and also indirect or simplified method. So with a regular home office deduction, you take the percentage of the home office. For example, let's say you have a home, 2,000 square feet, and 200 square feet is your office. Therefore, 10% is the home office. So you use a form 8829, and then you allocate the expenses on that form between direct and indirect. Direct, it's what directly relates to that home office. If you painted the walls in your office, it's a direct expense. If you painted the entire house, and you only take a 10%, that's indirect expense, right? So on the Form 8829, you have to depreciate the property, over 39 years, because it's considered a commercial property. So which is a drawback, because then there's a depreciation recapture. But when you have an S corporation, there's no depreciation. You don't have to take a depreciation expense. So that's another reason why you might want to be an S corporation. So if you use your home office for more than 20% of business use, it might be a little bit too aggressive. And then, of course, there's a simplified method, meaning IRS gives you $5 per square foot up to 300 square feet, so you can deduct up to $1,500 in your home office, but provided your home office is 300 square feet. If your home office is 200 square feet, so you just take the 200 square feet, multiply by 5, so that's basically $1,000. But again, usually the regular home office deduction is much more beneficial. You can literally save $1,000, $1,500. Other expenses. Keep track of your business mileage. In 2019, it's 58 cents per mile. If you have a luxury vehicle, you don't drive a lot, you want to put it on the business, sure. It has to be recorded under the business. So the title has to be recorded under the business. It's a business vehicle, right? So if you have a vehicle over 6,000 pounds, like a cargo vehicles or vans, you can deduct the entire 100% of that vehicle. However, make sure it is a good idea, because if this year in a 20% tax bracket and you deduct your $60,000 or $70,000 truck, and then next year, you're going to be in a much higher tax bracket because you're planning to make much more money, well, maybe that's not a really good idea to deduct your vehicle in the first year, all of the cost. Because, especially if you have payments, you're going to have a payments for 6 years. You will have the cash outflow, but you will have no savings, no tax saving benefits, to have that, to offset that vehicle cost. So, and then also, if 3 years from now you decide to sell that vehicle on the books, this vehicle is going to be a zero cost. So what does that mean? If you sell it for $40,000, you just have a $40,000 income right now. So again, think carefully about how much of that vehicle do you want to deduct in the first year. And this is the last one we just talked about, is the Colorado capital gain exclusion. So this is it relates to the properties that have been rented. Like if the people, investors purchased the property before June 4, 2009, which, we had several clients who did that. And you can take $100,000 exclusion on the sale of real property. The properties must be located in Colorado. You don't have to be a resident of Colorado, but the property has to be located in Colorado. And you have to own this property for at least 5 uninterrupted years. You can refer that to the Colorado For You Information Bulletin 15, or see us, or see your CPA. Again, there's $100,000 exclusion, means if you multiply by 4.63% Colorado tax rate, that's a $4,630 tax savings if you sell your real estate in Colorado, and it's the one you purchased before June 2009. So it's a great way to save money in taxes. So how Colorado Business CPA can help you? We are a full service accounting firm. We do a tax planning, and what's really important, we do intentional growth package. This is what we offer for our entrepreneurs. And what it does is we will do your compliance work, meaning your bookkeeping. We'll do a quarterly reviews. You will have a quarterly review with your accountants, with your assigned accountant. And then there's a monthly overview and comparison. We will prepare your tax returns. There will be a tax planning. Obviously, every consulting, any tax correspondence will be we will be responding to any correspondence. We will run the payroll. We also do mastermind groups, the business coaching with a focus on sales. Like there's a quarterly mastermind coaching, there's a quarterly one-on-one, as I already said, with the bookkeepers, and a weekly group phone conference with a CPA, because I believe we are running our businesses with a goal. We have a purpose, why we're running, right? What's your why? Why are you running your business, right? Is this to make money? Is this to create a difference in the world? So you have to have intention, right? You can't just run a business and not know the numbers or where you're going, what's your goals. So these mastermind groups, mastermind quarterly meetings, as well as the phone calls, help you to be intentional about your business. So this is again a great way to connect with us. Thank you so much. If you have any questions, feel free to contact us. We are at 1-800-5040-CPA, coloradobusinesscpa.com. Thank you so much. Please subscribe to our channel, like our page, and we're looking forward to talking to you. Thank you. Bye-bye.